All right, good morning, everyone. We are now live. Give us a few minutes. We'll get connected on all the platforms. We'll get started here in just a minute. Looks like we got some people in the chat already. Go ahead and throw that up. Good morning, Christina. Thanks for tuning in. Hello, everybody. Just give us a few minutes. Let us get connected on all the platforms, and we will get started. Yes, happy Valentine's Day. Good morning, everyone. Get started here in just a minute. Looks like we're live on about 4 platforms, one more to go. Thanks everybody for tuning in. Today is February 14th, Valentine's Day. It's just after 11 a.m. Eastern Standard Time. So our program are all live with rates for today. Unfortunately, the 10-year has gone up today. The markets have reacted to some of the CPI news. So I'm guessing today we're going to see some rates a little bit higher than yesterday, but we'll watch it together and see what's going on. All right. Good morning, everybody. It looks like we're live on all platforms now. So let me go ahead and get started. Thank you for tuning in. If you guys have any questions about our deep dive today, please put them in the chat or the comments on your platform, and we can bring those in if we have any specific questions. But let's get started with today's show. All right. Thanks, everybody, for joining us today. My name is Nick Hiersche. I'm the president of the Mortgage Calculator. We are a lender that specializes in alternative financing programs, aka non-QM loans. In particular, today we're going to go into a deep dive example with our sales manager, Jose Gonzalez, with 27 years of experience, about our mixed use property loans using our DSCR programs, which are some of our favorite programs. If you've watched the show before, you know we love to talk about those all the time. But this will be a specific use case for our 2 to 8 unit mixed use properties, as well as the same program also works for 5 to 8 regular multifamily properties that are just residential. So Jose will give a couple examples of that specific DSCR program. And then we'll have Kyle Hiersche, our COO, close out the show, explain how to get with our team to get a detailed quote for any of our programs that you might like to see. So thanks everybody for joining us today. It is February 14th. Happy Valentine's Day to everybody out there. It is just after 11 a.m. Eastern Standard Time, and our rates are live. So let's go ahead and switch over to our live pricer and check out what the rates are doing this morning. So give me 1 second. Let me switch my screen, and we will get started. All right. So this is our quick pricing tool that we have for our mortgage professionals. So again, this is just an indication of the pricing today on February 14th. Please get with our team. We have over 350 licensed loan officers, and we're licensed in 20 states now. Yesterday, we were licensed in 19. Today, we just got another one. So 20 states for primary and secondary homes. And almost every state in the U.S., we can do our business purpose DSCR loans, like the mixed use example that Jose is going to go into a little bit later. So we will go into that in a little bit, but first let's check out what the rates are this morning in general on our programs with our pricing tool here. So as we do every morning, we're going to pull up a standard scenario. We're going to do an 80 LTV loan, 20% down payment. We're going to search for our best combination with one discount point in price. Most of our customers are asking to buy down the rate a little bit, so that's going to be our standard search scenario. We're going to start with our conforming conventional programs as we do every morning. Then we're going to switch over to FHA, typically the second best option. Then we're going to show our thousands of non-QM, aka expanded guidelines programs. We have over 4,300 loan programs under expanded guidelines beyond conforming and FHA. So those are amazing programs. We'll go into those a little bit. And as I mentioned every morning, we can also quote VA instantly. So our veterans that do qualify and have their certificate of eligibility, please let us know and we'll be happy to quote that for you. But since not everyone qualifies, we won't do that live. And same with USDA. If you're looking in a rural area please let us know and we can quote that instantly as well, but not all properties are in a rural area and eligible. So let's start the show today with our conforming conventional rates for a purchase, 30-year fixed, pretty standard scenario. We're going to do primary, single family, 1 unit, Florida, Miami-Dade for all of our settings. That's because that's where our office is based. For all of our examples this morning, we're going to use a 760 FICO score and a 40 estimated debt to income ratio. And let's check out what our rates are for this morning. So this is a live tool, so let me pass the security check. And as we see every morning, these Home Ready and Home Possible programs from Fannie Mae and Freddie Mac are great, but they are only for borrowers under an area median income usually. So let's cruise down to the first standard program that would be eligible for anybody and compare that. So this looks like our first option. We have our Fannie Mae and Freddie Mac. And the best option this morning, it looks like, was a 6.49 rate for 1 discount point in cost here on a standard conforming program. See if there's any other options. Oh, right here. Oh, no, that's a Home Ready. So, yep, that looks like about the best option. A lot of options right there, right around the 6.5 rate for 1 discount point in cost. And yesterday, we were at about, I believe it was 6.375 when we pulled this up yesterday. So rates have gone up a little bit this morning. A lot of people saw the news this morning of the CPI numbers came out. So that obviously affects our rates in real time. And now you guys can see what it actually looks like for an actual typical scenario when the rates go up and down and the markets go up and down. So that's why we love to do the show. Let's go to our second scenario that we do every morning. We'll pull it up again to 80 LTV, 20% down payment. But this time, if a customer doesn't qualify for conforming or conventional, we usually switch to FHA as the next best option. FHA usually allows us a little bit more leeway on the guidelines for a lot of things, and most importantly, our debt to income ratio, which is typically the challenge. But we'll keep everything else the same: purchase, 30-year fixed, primary, 1 unit, and same credit in DTI. And let's check out what our FHA rates are this morning. So they, I believe, went up a little bit as well. We had a little bit lower rates yesterday and last week on FHA. But right now we have a, the second option would be the best here. 5.625 rate for 0.625 in discount points in cost. And always, as I mentioned, on FHA especially, make sure you're looking at the APR so you can compare apples to apples. There are additional costs for FHA for the monthly mortgage insurance and upfront mortgage insurance. So make sure you check that out and use that to compare. But some great options for FHA financing for our borrowers who might not otherwise qualify for conforming. Now, if a customer does not quite qualify for FHA or maybe can't quite get the amount of purchase power that they want with FHA or conforming, a lot of lenders do not have other options. Fortunately, we have over 4,000 loan programs under our expanded guidelines options. So a lot of lenders and banks can only do conforming or FHA. We have 4,000 additional options beyond that. So let's check out a couple examples here. So we'll do expanded guidelines, aka non-QM. We'll keep everything else the same: primary home, single family, Florida. But you'll notice one new option pops up when we select non-QM. We can change our income verification. So instead of doing full doc like we do for conforming and FHA, we're going to pick one of our other options. Let me show you the options here. We can do 1 year or 2 year alt doc. We can do asset related. We've done a couple shows on that. Business bank statement 12 and 24, very popular. DSCR, we love that. We'll talk about that here later today as well. And our most common program is our personal bank statement 12 month. So that's what we use for the show example today. And this is going to be for our self-employed borrowers who typically sometimes have some trouble qualifying full doc with their tax returns if they're self-employed. So what we're going to do is use 12 months of their bank statements in order to determine their debt to income ratio and ability to repay this loan, and use their alternative income documentation, which maybe they do qualify for conforming, but not quite for the purchase price they want, right? So a lot of people don't qualify at all, and we can qualify them with these programs, or they need to qualify for more house or more payment, and therefore we can use these alternative programs to get them where they need to be. So these are great options. Let's check out what we have today. And remember, these are going to be higher rates, but again, these would allow someone who would not otherwise qualify to purchase their dream home and or buy more home and again purchase their dream home. So great options here for us. Our lowest option today 7.625. Last week we saw rates almost in the down to 7, but right now we're at 7.625 on the bank statement program for 1 discount point in cost. So there's a lot of different options here, though, so please get with our team. Notice if I scroll down here, there's dozens and dozens and dozens of programs that we have that use bank statements. So we have all these different programs. Our team can navigate which one might work best for your situation. Some of these programs may allow things like a credit event, such as a foreclosure or a bankruptcy, things like that. So a lot of different programs, a lot of ins and outs. Please get with our team. We'll find the best fit for you. So now we'll switch gears a little bit and we will check out our investment properties before we pass it over to Jose. So we'll check out a couple standard scenarios for investment properties like we do every morning. So we'll pull this over to investment. We'll do a 80 LTV, 20% down payment example like we do every morning. And we're going to compare our investment property options. So whether you're a first-time investor purchasing your first rental property or you have 100 rental properties, we have some options for you. Of course, there's only conforming conventional, and then we have thousands of programs under expanded guidelines. So FHA, VA, USDA, not eligible for investments. So let's compare our conforming with our non-QM. So we'll keep everything else the same here, 80 LTV, purchase everything else the same as we did on the primary, but let's check out our conventional options. As I say every morning, the GSEs, Fannie Mae, Freddie Mac, they have added an additional penalty to these investment property loans in order to discourage some borrowers from taking advantage. So unfortunately, we don't see any options, if you see here highlighted on my screen, for 1 discount point in cost. So the best option the computer found was a 7.125 rate, which is still a great rate, but for 3.125 in discount points cost. So a lot of our investors are asking for other options, which fortunately we have thousands of other options in order to go up in the rate a little bit in case the property still cash flows. Most investors don't mind going up in rate in order to reduce their out-of-pocket costs for discount points. So a lot of great options we have here for our borrowers that do qualify for full doc and conforming programs. And just keep in mind that there are not going to be a lot of low discount point options at this time. Therefore, we love to present all of our non-QM options. So let's pull this up again, pull up expanded guidelines. And when we click over to investment under expanded guidelines, AKA non-QM programs, we're going to be able to edit our income verification. And so we can use all the cool stuff we talked about before, but our most popular, once we're on an investment property, is our investor DSCR. And that is because it does not require any income verification or employment at all. So we're just going to use the property rent in order to cover the PITIA, the payment, the mortgage payment for the property, and determine if that property can cover the payment. We even have some options when a property doesn't quite cover it, right? So no ratio options for DSCR, 0.75 options for DSCR, a lot of great pricing for properties that cash flow greater than the payment, right? So if the DSCR value is greater than 1, we have a lot of great options. But you'll see here a ton of different programs, but this will just be a standard scenario. And when we have a non-QM investment property, we're typically going to have a prepayment penalty. That's pretty standard. We're going to do it with 3 years today. That's pretty standard. We can obviously price it with no prepay. That's going to be more expensive. And you can price it with 5-year prepay, which will be a little bit less expensive. But for our standard options and for the show every morning, we're going to do a 3-year prepayment. So let's check out our standard DSCR purchase options here. And we should see some great options. So notice that these, I believe, are the same pricings that we saw yesterday. So you see non-QM doesn't move quite as dramatically as the conventional rates do. So you saw the conventional programs were about just in the lower 7s for 3 to 4 discount points of cost. Now we have a DSCR option for 8.375 rate, but 0.975 discount points in cost. So our investors love to save cash out of pocket. And as you can see, that's only about 1% higher in rate, and it reduced the cost by a significant amount. So all of our investors love these programs, and most importantly, much less documentation, no income documentation, no employment needed. And our investors that own, as I said before, 100 properties with these DSCR programs, they can do, pull their credit once and apply for 5, 10, 15, 20 properties, cash out 10 properties to buy 10 more, etc. So these DSCR really allow us to expand our portfolios for our investors to both refi and purchase properties very quickly with little documentation. So we love these programs. And Jose is actually going to go into a detailed example of one of our favorites here. So let me get ready to explain that. Give me 1 second. Pull up our topic for today. And let me reshare my screen real quick before I give it over to you, Jose. So today I'm going to have Jose do a detailed example on our mixed use property loan. So these are programs that use our DSCR. So Jose will explain a little bit more about DSCR and how that works. And in particular, for a mixed use property, which would be something typically like you see in the picture there. Typically we have a commercial, or retail bottom floor and some sort of residential upper floors. So very common, especially as I tell of our team. You guys have heard me chat about it in a few of our trainings. This is the more popular kind of public policy use, right? So all of the zoning in a lot of the major metro areas, and just in general as a hot topic for the new kind of zoning and public space use, they're all leaning towards mixed use. So we do see a lot of these coming into play, and we do see that as the highest and best in many cities in a lot of areas, highest and best use. So this is going to become more and more popular. So for our team that's out there, just know that these properties are coming into play in Miami. Every new development in the city of Miami has to be mixed use, right? So this is a very popular concept in general. And there's a lot of older properties that are mixed use. It was popular back in the day, and now it's coming back, and we'll see a lot of new properties as well come into this usage. So I'll have Jose give a detailed example on this. Just keep in mind that this is going to be for a very unique property, and it's also going to be eligible for our small balance 5 to 8 multifamilies, as well as the 2 to 8 mixed use. So a little bit of a versatile product we have here, but the mixed use is the one we want to go over today. So let me go ahead and pass it over to you, Jose, and you can explain a little bit more about the program.
All right. Good morning, everybody. Jose Gonzalez, sales manager, Mortgage Calculator. Thank you for joining us for Mortgage Rates Live with the Mortgage Calculator. This is a product definitely brings an ear-to-ear smile to my face, because this is one of the ones that really blows everybody out of the water when you tell them what's actually possible compared to what they're used to hearing out there in the commercial world. Right. To give a little bit of context here, this is a DSCR product, and it is more like a residential DSCR product, which is what makes this option so special. Because normally in the commercial world, when you have collateral like this, it is subject to a lot of the restrictions in the commercial world. And one of the restrictions that definitely can impede this program, or not this program, but this property type from funding, would be population density in an area, usually after they review the zip code where the property is. And if they find out that the population density is too low, even if it's a great property with a DSCR of 2.5, 35% loan to value, all of these great compensating factors, 900 credit score by the borrower, they're still not going to do the loan because they would not be able to sell it. It would not fit into their portfolio. So it would be just something they wouldn't be able to do. Well, with this hybrid type program that we have, we are able to do those 2 to 8 unit mixed use type properties and the 5 to 8 unit residential type properties under the same guidelines that we reviewed the residential DSCR properties, which means, most importantly for everyone out there, it means no zip code restrictions, that would impede the loan due to low population density in the area, and also a low minimum loan amount of only $250,000. Now, this is very important, for some markets out there like Ohio, Pennsylvania, Wisconsin, let's say some of the markets in the middle of the country where prices are a little bit lower and where you do have a lot of opportunities to purchase properties in these price ranges if you could just find the financing. And here we do have those financing options at amazing rates. I mean, every time I look at it, I gotta confirm these are correct. because the rates that we're offering for this product are so much lower than our competition, and the costs are also so much lower, and the terms are so much easier. I mean, it's win-win-win for everybody. So in the first example that I have here, I have a purchase option. And again, these examples we're doing here are going to be, low balance options below the normal minimum $400,000 that most outlets have for this product. We can take this as low as $250,000 minimum loan amount at the minimum. At the maximum, LTV of 75% LTV. This particular option does require a 740 minimum middle score in order to be able to benefit from these rates and these LTVs. Main point to consider with this mixed use program is that it limits the maximum mixed use component of the structure to 49.9%. So you got to be at least 50.1% residential, 49.9%, no more than that commercial, and you can do the deal, right? So great deal here. You see, I mean, I only showed one rate example, but lowest cost would be 0.75. Most of our investors like to do a little buy down, so I selected the example here, 8.875 with a cost of 2.25 points, equivalent to $6,328. So if you look at here, our example, something normally you wouldn't be able to do, $375,000 purchase price, 25% down payment, loan amount of $281,250. This would be a typical 5-6 unit in Ohio, Pennsylvania. Those Midwestern states where the prices are a little bit lower, but where the DSCRs are very high. I mean, every property we do from over there, DSCRs are 1.2, 1.3, 1.5, 1.8, 2.0. They're up in the stratosphere. And if we could facilitate financing, then we have a lot of happy investors making a lot of money. Why limit ourselves to only the areas where the limited programs that one might have would work, when our programs are not limited and allow us many more opportunities to capitalize? So now we're going to show the refinance, and here's where it gets interesting. The loan to value on the cash out refinance of this program is also 75%. So again, 75% max LTV on the purchase, 75% max LTV on the cash out refi of the mixed use property. Obviously a little bit higher in the rate, 9.75. Same costs. I kept it here so we could compare apples to apples. The same 2.25 points on this one. Same loan amount, same value, and rate just a little bit higher, 9.75. Again, 75% LTV, cash out refi, mixed use 2 to 8 unit property. So now we can do the same program when the property does not have a mixed use component. So the rate will be better because there is better pricing when it is not mixed use. There is quite a bit of a hit for the mixed use. So now I'll show you again what the purchase was. The purchase was 8.875, 2.25 on the mixed use versus the 5 to 8 unit. It's 8.25 with a cost of 2% for this rate that I'm showing you there. So 8.25% on a purchase of a 5 to 8 unit property using DSCR. For qualification, I believe with the rates that Nick was showing us for other similar investment properties on a 1 unit, I think he showed us conventional rates that were somewhere around this cost. So this is obviously a no-brainer.
It's right in there, man. It's right in the mix of the regular DSCR program. That's amazing.
Yeah, I mean, this is giving me goosebumps right now when I'm looking at it, because I just can't imagine anybody who I talk to this product about, who's really interested in this product, who isn't just gonna be, banging my door down and say, Jose, where do I sign? I don't want 1, I'll take 3, before you sell out. And now on the cash out on the 5 to 8 unit, look at that, 75% Still, cash out, 5 to 8 unit. Look at that rate, 8.85. It's about a little bit above. I think that's 2.375. And if we're going to look at the cash out on the mixed use, it was 9.75 at roughly the same cost. So you see the 5 to 8 unit when it's not mixed use, they're looking at this like it's an extension of just the DSCR program. They're just running it all through the same underwriting, same guidelines. It's going all in the same buckets, which keeps it really, really easy and pleasant experience for everyone involved. And for our investors, they get to benefit from these amazing options. Again, mind-blowing here how we can offer this. Many of our competitors out there who try to offer this product, their rates are in the high 10s, 10.5%, 11%. Different requirements. A lot of times they may have also zip code requirements. So that property in Pennsylvania, or maybe that property in Ohio, would be in a lower population density area and not even at the higher rate. They wouldn't be able to do it. With us, we can do it as long as the property meets the DSCR requirements and the borrower has the credit score, especially on a refi, where we don't even need, on a cash out refi, we don't even need to verify their bank statements because we can use the cash out proceeds for reserves. So very, very simple operation here. So really looking forward to helping everyone structure their mixed use and 5 to 8 unit and 2 to 8 unit and every other DSCR investor and any other type of loan out there. We do provide solutions at the mortgage calculator.
Beautiful. Thank you, sir. You do have one question in the chat. Let me highlight it here for you. Lead right into what you were just talking about. Low population and low prices. Can you talk about how they can use this specifically? I know you mentioned it a couple times, but
I mean, again, it depends what products that we're talking about, because if it's a residential product, there is no population density restrictions or anything like that. They can't, that I don't believe is allowed in any residential type 1 to 4 unit type properties. However, with this product, like I just mentioned, since it is a hybrid where it's basically an extension of their 1 to 4 unit product going all the way out to 8 units, there are no limitations. So you can definitely use this product to lend in those markets without worrying about it. And as a matter of fact, we have this same product with a little bit of obviously differences that can go up to 100 units, from 9 to 100 units. Now, once you go to that realm, they may adjust the loan to value a little bit due to low population density, but they will not tell you they cannot do it. They may just adjust the pricing a little bit, adjust the LTV if it's really low on the population density, but we can still do it as a DSCR option.
So the short answer is 5 to 8, no problem. 8 to 100 units, or 9 to 100 units, I guess. Little bit of restrictions, but not like a true commercial. So we still have a hybrid kind of option, basically, right?
Correct. Very important, because a lot of times the really good deals tend to be a better deal because of that. It's a lower population density area. Somebody's getting a good deal, and now they're trying to find financing for a 2.2 DSCR, and they're just wondering, what's wrong here? Why can't I get it? Well, if you come to the mortgage calculator, it'll be a big old yes.
Beautiful. Love to hear yes. All right, let's go ahead and wrap up the show for today. Thanks everybody for joining us. Let me pass it over to Kyle, who can just talk a little bit more about how to actually connect with our team and get the full detailed quote like Jose had said.
Perfect. I'm ready to go buy an 8-unit property now. I'm excited, right? So as Jose said, we got those programs. And as Nick said earlier, we have, regular 1 to 4 unit DSCR. We have the bank statement programs, as well as conventional FHA, VA, USDA, all that kind of good stuff, right? So we are licensed in 20 states. And we can also do these DSCR loans in most states. So definitely we can connect you with one of our loan officers. If one of our loan officers may have shared this video with you already, that's great. Get with them. They can send you some quotes. Even on these type of programs, they can send you quotes instantly, right? Now, If you're not working with one of our loan officers, you can visit us at themortgagecalculator.com, or you can send us an email, info@themortgagecalculator.com, and we can connect you with one of our loan officers. Now, as you can see from the different programs we have, our loan officers are consultants that can walk you through all of these options. So we go above and beyond. Most loan officers are only used to conventional VA, FHA, USDA, as opposed to our loan officers who are familiar with all of these different kind of products, and they can consult you and walk you through what loan product is going to be best for your situation. And they can quote you instantly in just a few minutes on all of your different scenarios, and maybe give you some different quotes on different programs and allow you to make the best decision for what works for you. So themortgagecalculator.com, connect with us. We'll get you with one of our loan officers. And we do this show every day at 11 a.m. Eastern, every weekday. And we'll go through the rates for that day. And you can kind of see as we go, the rates go a little bit up and down. And we'll check the rates every day for all the standard programs as well as our expanded guidelines. And then we do a deep dive into a subject, just like we did today with the mixed use loans. We have a different subject that we do a deep dive with every single day. So tune in 11 a.m. Eastern on weekdays. Thank you for tuning in, and we will see you all tomorrow at 11 a.m. Eastern. Thank you, Nick. Thank you, Jose. Everybody have a great day. Happy Valentine's Day. We'll see you tomorrow.